With the Nixon shock, the bankers became central in the distribution of income. Up until 1971, under the Bretton Woods system, the bankers were irrelevant. Banks were severely circumscribed in what they could and couldn't do. There was very little stuff they could do. They couldn't take your money and bet in the stock exchanges or derivatives markets. There were capital controls. A banker could not shift money from the United States to Brazil to Europe at will. They had to get a permission to do this from the Fed, from the IMF. So banking was boring up until this explosion that the Nixon shock triggered. That couldn't continue after the Nixon shock because the whole point, as I said before, of the Nixon shock was to use the American trade deficit in order to absorb into the United States the goods of everyone. That's why you needed to have free trade, and to bring in the money, the foreign capitalist money through the bankers. But that meant unshackling the bankers, letting the bankers do as they pleased, go crazy. And you needed an ideology for that. So for the rise of financial capital, you needed an ideology to back it. And that ideology was neoliberalism. Today,